Hey everyone, Chris Hobart here, the Wealthologist. Today I want to talk about something I think the media keeps getting wrong. Are tariffs really the reason inflation is sticking around? All right, let's cut through the noise, shall we? Because when it comes to inflation, I gotta tell you, the loudest voices, they're not always the smartest voices in the room. You see, since 2020, we've been fed a constant stream of predictions. Things like tariffs are going to cause hyperinflation, or the Fed's going to overcorrect, or boy, get ready for stagflation. But here we are. It is June 2025. And I got to tell you, the data, it looks different than what we've been hearing a lot of the talking heads say. You see, inflation, it's been cooling, and GDP is actually steady to strong. And M2, what's called the money supply, it's growing slowly, which is what we want. So I want to break down what's really happening, and we're going to do a bit of a historical perspective, right? So, la la la, let's go back to 2008, right? During the financial panic, the Fed launched quantitative easing, and that's when they slashed interest rates. They printed a bunch of money. Essentially, they ballooned their balance sheet, and everyone screamed, hyperinflation, watch out, it's coming. Prices are going to go through the roof. But here's the thing, it never came. Now, why? Well, even though the Fed was printing money like crazy, banks were restricted in how they could lend the money. So, these tighter capital rules and mark to market accounting, it kept M2, the money in circulation, it growing at a pretty moderate pace. So, there was no M2 surge, thus no inflation surge. Now, let's fast forward to a couple years ago, COVID. Now, this is totally entirely different story. See, we still had that Fed printing of money and that increase in the money supply, but the Fed also loosened the rules for lending out money. You see, the Treasury, they used banks to push out stimulus, PPP loans, tax rebates, unemployment bonuses. At that point in time, M2 skyrocketed. And guess what? So did inflation, peaking at 9% in mid 2022. I gotta tell you, that's probably one of, if not the easiest forecasts in modern economics. If you've got big M2 growth without any sort of restrictions on how that money's going out, it leads to big inflation. Now, what about now? Well, M2 rather is basically flat since 2022, up just 0.5% from its peak. Now, sure, it's risen 4.4% year over year and about 6.5% annualized over the past 3 months. But I got to tell you, comparatively, that's still tame. So, what about where we sit right now? Well, CPI inflation is down to 2.3%, just about at the 2% goal. Core CPI is at 2.8%. Now, in the past 3 months, CPI is actually running at 1.6% annual rate. And producer prices are actually down at a negative 1.2% rate. This is actually what we would consider textbook disinflation. So, you might be asking, why in the world has the Fed not started cutting rates? Well, apparently they're still watching the tariffs. Understandably, I get it. Tariffs are politically loaded, but economically, they tend not to drive broad inflation. See, tariffs increase the price of specific goods, but when that happens, people just spend less in other areas. That puts downward pressure on other prices. So it's not inflation. It's more kind of what we call price reshuffling. Sure, certain things are going to feel more expensive, but it kind of comes out in the wash, if you will. Now, as I like to say, tariffs rearrange the deck chairs. M2 determines how high or low the ship floats. And right now, the real federal funds rate, the interest rate minus inflation, it's about 2%. That's the highest for the longest since 2006 to 2007. So, yes, the Fed has kept rates tight. And yes, that's why inflation is cooling. But that also means there's room to cut rates right now. Maybe two 25 basis point cuts in the Fed should act. Yet, because of politics and tariffs and fear, my guess is the Fed's probably going to wait till September. And quite frankly, I think it's a mistake. So the question you're asking is, what should you do? Well, first, I don't want you to get distracted by the political drama, and there is plenty of it right now. There has been and there will be. I want you to keep your eye on the money supply, not the headlines. Once you focus on what's actually driving what's going on, it's going to change your perspective. I also want you to position your portfolio for steady disinflation, not wild inflation rebounds. And if you want to know what that looks like in your financial world, just drop me a line. Let me know. Happy to talk about it. Love helping folks cut through the noise and build a real strategy that works in the real world. Now, before we go, I want you to drop a comment. Do you think the Fed should cut rates right now, or should they wait it out? I want to hear what you think. And of course, if you like this, do me a favor, like, subscribe, and hit that bell if you want to hear the real story updated every week. As always, I'm Chris Hobart, the Wealthologist. We'll see you next time.